Welcome back to the channel, Finance with Avrin. In this video, I'm getting into one of my favorite topics, investing for the long haul. Specifically, I want to share with you 5 reasons why I've been loading up on Google stock, that's Alphabet, ticker symbol GOOGL, as a long-term investor. If you've been following the market, you know Google's been a powerhouse for years, but I think it's still got a ton of runway ahead. From its rock-solid financials to its dominance in multiple growth sectors, there's a lot to unpack here. So grab your coffee or tea, get comfortable, and let's break down why GOOGL is a cornerstone of my portfolio. Strong financials and growth. You see it right there, their fiscal year 2024 results up on the screen, and it's massive. This company makes a lot of money, a lot of revenue, and some great margins as well. Alphabet's revenue in the fourth quarter of 2024 increased 12% year over year to $96.5 billion. Also, their Google services revenue increased 10% to $84.1 billion. Google Cloud, which I'm going to get into more in the video later because, spoiler alert, that's one of the reasons why I've been buying this stock. But yes, Google Cloud revenue increased 30% to $12 billion, led by growth in the Google Cloud platform across core Google Cloud platform products, AI infrastructure, and generative AI solutions. Google's spending a lot of money on AI. However, they're implementing a lot with AI as well. And their total operating income increased 31%, and the operating margin expanded by 5% points to 32%. Great margins. That is awesome right there. So this consistent double-digit growth showcases Google's ability to scale its core business even in uncertain times and uncertain economies. What we're facing right now in the market with, inflation and this geopolitical that and that's going on, this isn't new. This has been going on for decades, literally. I mean, it's going on for a long time. But last year we had inflation worse than what we have now. The year before, yes. So yeah, Google's been performing in rough economies, nice economies, great economies, meh economies for years. That's why I'm not too shaken up about what's going on in the market right now. I look at this as an opportunity when great stocks get beaten down in these kind of economies. But yeah, so also they have diversified revenue streams, which is important because yes, they have a lot of domination in search. They have around 90% of search that happens online happens through Google. And one of the next biggest search platforms is YouTube, which is owned by Google. And of course, yeah, their Google search and YouTube are 2 of their main cash cows, which bring in a lot of money, a lot of revenue, a lot of growth. And also something else that Google does on their financial statements is they have something called other bets. These are things that they throw money at, hoping something hits. Sometimes you have hits in this section. Sometimes you don't, you have misses. Google has so much money, they can do this and not even really worry about it, because when something hits and it really sticks and it starts growing, it's another diversified, great revenue stream. One of those that's happening, it looks like right now, is through Waymo, which is their, automated driving platform with the auto taxis and robo taxis, auto taxis, whatever you want to call them. Waymo is starting to gain traction. With Waymo's growth, they've been growing, of course, in the cities in California, and they're spreading to other major cities across the United States. And recently, Uber and Lyft stock took a hit because of the fact that Waymo is going to Miami. So this revenue diversification reduces reliance on a single segment, which is nice because, like I stated, Google does have 2 main segments that a lot of their growth and revenue comes from. However, one of the reasons why this stock has been getting hit some is because of AI and the chatbot, the Chat GPT, the Grok, the Perplexity AI, DeepSeek, all these other platforms, with the AI, people are using those instead of searching somewhat. Do I think Google search is going away anytime soon, or really anytime in the next years or anything like that? I don't think so personally. It's not financial advice, but Google's also in AI as well. And Google can use AI, and they are using AI to grow their advertising business, because that's where they pull in a lot of money. If their advertising business gets even smarter with the use of AI, guess what that's going to equal? More money gained from advertising. So yes, also this graph right here, I want to put on this video. You see the strong annual growth from Google from 2002 to 2024, just up and to the right. Not a year that Google has negative revenue growth. You see it, some years are definitely better than others, but what do you see? Continued growth with their annual revenue. Let's get on to the next reason right here, and that is the attractive valuation. Google Alphabet is currently still trading under its 200-day and 50-day moving average. When a strong, solid company that I like is trading underneath these moving averages, it just sets off alarms for me. It's already on my watch list because it's already in my portfolio. However, when it starts trading underneath this valuation and nothing's changed that negatively with the fundamentals, with the structure of the company, it sets off alarms for me to buy more of this stock. And yes, you see it right there on the screen. When Alphabet Google is trading underneath both of these moving averages, what do you notice on that chart? Does not happen often. That's the past 1 year right there. And I'll show you the past 3 years as well right there on the screen. So yes, does not happen often. However, when it does, it's basically like a buying opportunity because it goes up after it trades underneath there. Maybe for a little while, sometimes longer than other times, sometimes barely trades underneath both of them. But yes, it goes above them. Often it's above that 200-day moving average. Nice valuation where I'm thinking it's trading at right now. See that graph down there on the bottom left, 5 out of 6 with the valuation. That's just the AI insights from MSN Money website. See the quarterly valuation on the right there. Where has that PE been in the past? Higher than it is right now. And that also tells me that this is trading at an attractive valuation. That trailing PE has been in the mid 20s, the high 20s. The forward PE has been in the mid 20s. Right now is underneath 20. Price to book is lower than it has been in the past several quarters. There are some definitely flashing lights when it comes to that valuation of the Alphabet Google stock. Also, so with that attractive valuation, PE ratio as of March 2025 for GOOGL is like 20% right there, 20.40 right here, according to Wise Sheets. The mean historical PE of Alphabet over the last 10 years is 29.06. So that current PE of 20.40 has changed 6.92% with respect to the historical average. Over the past 10 years, the highest that PE has been at for GOOGL is 61.37. What does this tell you right here? All of this, your highest this, mean average this, it's trading lower than it normally does, basically, with this stock. Now, there is definitely different reasons. It's not just doing this just because, definitely different reasons. Like I've told you, with the AI spin, with what's going on in the economy, with other competition with AI, various factors for sure. But one thing is for sure, it is trading lower than it normally does. So yes, a nice valuation is one of the reasons why I've been buying more of this stock lately. And another reason why I've been buying Alphabet stock is because of their cloud growth. Now, Google Cloud is one of their rising stars, with revenue soaring at 31% year over year to over $11 billion in the fourth quarter of 2024. And it's now profitable with $2 billion in operating income. And you see right there the trailing 12-month data, and focus in on the Google Cloud lines right there. You see continued double-digit growth with the Google Cloud right there. 27%, 25%, 26%, 29%, 30%. You see the billions of dollars going up right there with Google Cloud, as well, of course, as Google search and YouTube ads as well. But right now we're focusing in on Google Cloud, but you see the growth right there. It is nice to definitely see that another segment for diversified revenue for Google beyond the search, beyond YouTube. Google Cloud, definitely a bright spot within this company. And you see it right here, these graphs right here, and you see the growth right here from 2017 to 2024. Google Cloud revenue continues to go up and to the right nicely right there. And that's revenue in the millions of dollars. Now, yes, there's competition for sure with the big dog in this space being Amazon, AWS, and they have nice growth as well. They've definitely had nice growth. Microsoft doesn't have as big of a business in this segment as Alphabet does. They're like number 3 when it comes to market share. So yes, Google Alphabet's number 2 when it comes to market share with Google Cloud. While the growth has been nice for these cloud services for all 3 of these companies, it is slowing down somewhat compared to what it's been, because when it was hot, and everybody's just snatching up the cloud services and putting their information, their data, their websites on the cloud. Of course, there's a lot of growth, way like hotter growth, like faster growth years ago. Still growing for sure for all 3 of these companies. However, it's slowing down some. However, with Google Alphabet, they're outpacing Microsoft and Amazon with their growth. On that chart on the right there, Google Alphabet is in the green, and you see the fourth quarter of 2024, their growth higher than Microsoft and Amazon AWS. So definitely to be on the lookout, keep on your radar is the cloud growth with Google Alphabet. It is nice, and I believe it's going to continue to be a nice stream of revenue for them. And another reason why I've been buying Google Alphabet stock is because of their cash and their shareholder returns. You see the free cash flow, the operating cash flow. That is a definitely very important thing to look at when you're investing in stocks. You want to see great cash flow because the cash flow is showing you after everything's said and done, this is how much they're bringing in with cash. What can they do with this cash? They can invest back in the company through, innovation, research, and development. Especially in the tech sector, you have to do that to stay alive, to keep growing for sure. Google Alphabet is doing that. Another way you can use your cash to reward shareholders via dividends. Google Alphabet recently started a dividend about last year in 2024, and I'll talk a little bit more about that here soon. Also through buybacks, companies can buy their stock back. When they buy their stock back, that means less outstanding shares on the market, which makes the shares that you own more valuable because there's less shares, but you still have yours. Even when companies buy back their shares, they're not making you sell yours. They're not buying back your shares. They're buying back other shares. Your shares are still, you got 10 shares, you got 100 shares, however many shares you have, you still have that amount. However, you may notice that the stock price of those shares may go up because it becomes more valuable because there's less outstanding shares out there in the market. And also another way the companies can use the cash that they have from that free cash flow is through acquisitions. That's another way to grow. Google Alphabet is definitely a company that is known to acquire other companies, whether it be startups, smaller companies that end up growing to be bigger companies, or pretty large size companies. They can definitely continue to do that with their revenue. And it's something they're likely to do. A lot of tech companies do this to keep ahead, to keep growing. They're a little weak in one section. They see something that's great in that section. They may buy it up, make an offer for it. That's one way that these tech companies grow. Look at that on the right there. You see the assets versus liabilities. Definitely something I like to see is more assets than liabilities. And Google is showing you that for sure. Google Alphabet, around $450 billion of assets. Liabilities, around $125 billion of assets. They could just pay off their debt just like that with the assets, with the cash that they have. Now, with the cash and shareholder returns, like I told you, one thing companies can do is pay a dividend. Alphabet just started doing that last year, so there's not a lot of growth associated with this dividend yet. However, I believe this is going to turn into one of those dividend growth stocks, where that means they're going to be paying more dividends each year and growing that. But look at that payout ratio, only around 9.95% for the payout ratio. That means it's not paying out a lot of that cash flow to the dividend. It's not hurting them. They're not struggling to pay that dividend at all. Single digit payout ratio. Some websites even have this around 7-8%. This is actually the highest I've seen it from the couple of websites I looked at about the dividend information. But yes, and that's not much at all. Not a concern. Something you see, you could definitely say like, okay, they can easily grow this dividend and not affect the cash that they have that much at all. Also, one thing I want to show you with this chart on the right is the share buybacks. This is, like I was telling you, what companies can do with the cash that they have from operations is buy back shares, which I told you about what that does as far as the valuation of your shares that you own and outstanding shares and all that. What has Google been doing? Look at that chart for the past 5 years. They've been buying back shares, and not just a little bit. They've been buying back a lot of shares right there. You see it in the billions. So yes, with about $62 billion worth of buybacks in 2024. So with the return of invested capital, ROIC of around 33%, in the fiscal year of 2024, Alphabet is showing that they efficiently turn capital into profits, which makes it a shareholder-friendly investment with room for more buybacks and or dividend hikes. Analyst expectations, it's nice to see when analysts are in agreement with you as the investor about a stock going up and its potential for growth, but it's definitely not something that I just look at by itself and go, okay, analysts like this stock, they think it's going to grow, I'm going to buy it. It definitely has to go along with other reasons why I'm buying this stock. They are mostly bullish when it comes to this stock. As you see it right there, 36 ratings, which give it a moderate buy, 25 buys, 11 holds, and 0 sells. So the average price target for Google Alphabet stock is $215.33, which is around 31% upside from where the stock is trading at currently. Highest price target, $235. Lowest price target, $184, which is still higher than what is trading now. This is one of the biggest stocks that people own in general as far as hedge funds and things like that. If you have a 401k, ETFs, mutual fund, there's a very high likely chance that some of those funds, some of those ETFs hold Google Alphabet stock. So even if you don't own this stock individually as GOOGL or GOOG, there's a good high probability you own it in some form or fashion when it comes to basically having it via the ETFs or mutual funds. Wall Street analysts are more positive on this stock than they are negative for sure, with a moderate buy on their analyst ratings. So yeah, in summary, Alphabet combines a rock solid core business with high growth opportunities, all at a valuation that's hard for me to ignore. Its financial strength, AI innovation, and shareholder focus make it a compelling buy for me in March 2025. So yes, that is it with the video. Hope you enjoyed it. Take care.